Hey, happy Monday, everybody. Paulo Brands with your Monday market update. Hope you had a fabulous weekend. We are starting the week off on a locking bias. Here's the deal. You got to know when to fold them. You got to know when to hold them. We've had a great run. Rates are ticking up a little bit right now from last week. And, really it's from a technical side. When you look at the 10-year treasury, it's really in this dangerous zone where if it breaks through what's called a Fibonacci level, just imagine this level. If it breaks through, there's a lot of upward trend that it could go, and rates tend to follow the 10-year treasury. And so we could give some of that back. So just to protect yourself, don't play around, lock your loan, and we'll keep you updated if anything changes. Last week, as expected, the Feds lowered the short-term interest rates by 0.25%. Not really any big news there, but still a lot of misconceptions about that, thinking that 30-year fixed rates dropped 0.25%. Remember, they are not the same interest rate. The Feds control the short-term rates, which does have an impact on 30-year fixed rates. And really what it's looking more towards when you look at short-term rates is inflation. As I've said this 1,000 times, inflation is the kryptonite to 30-year fixed rates. But here's the truth, right? So builder confidence came out last week. It's starting to grow. But here's where we currently at. And if you're out there thinking about buying a home, this is something you should really process. Rates have been the best that they've been for a long time, probably over a year. There's still a limited supply of homes on the house. Yes, it feels like you see more signs because we're simply so used to not seeing a lot of them. When you see two signs up on the same street, you go, oh, here it is. It's all changing. That's not necessarily true. We're starting to get towards the more normal sales, but we're not even there yet. And then with builder confidence going up, they still have slowed down their production, which ultimately supply is going to be the biggest issue as it comes to the purchase price of the house. As rates go down, you should start seeing home prices start to increase. This is going to be a big week. The Fed's favorite measurement of inflation, I've already told you, it's the kryptonite 30-year fixed rates, is coming out this week. Be on the lookout. This is something that could knock the 10-year treasury up or down. So you really want to pay attention to it, especially if you're a gambler out there and you're just going to keep rolling. All right, if you need me, give me a call. Paulo Brands, Clear to Close Brokers. If you're out there looking for a house, or my realtor partners, if you're working, we're working.